Hi there, I'm Sam from solar.com, and today we're going to tackle some commonly asked questions about the solar tax credit. Now, this solar incentive is often called the ITC and the Residential Clean Energy Credit. It's all the same thing. And whatever you want to call it, it's important to know that this is the most valuable solar incentive in most markets and can really go a long way in maximizing your energy cost savings of a solar system. So let's get right into it. First off, let's begin by establishing that I am not a licensed tax professional and this video does not constitute tax advice. In fact, when I had questions about the solar tax credit regarding my own solar system, I consulted a local tax professional before signing my solar contract. I sue, and I strongly recommend that you do the same. Okay, so the first and most common question about the solar tax credit is simply this: how does the solar tax credit work? And that's a totally fair question because taxes and solar panels are not something that people deal with every day. So here it is. The solar tax credit is a dollar for dollar reduction of your tax liability worth up to 30% of what you spend on a solar and or battery system. Now that got dense in a hurry, so let's break that down. First off, the solar tax credit is worth 30% of your solar and or battery expenditures. And thanks to the Inflation Reduction Act, that now includes battery storage that's not connected to a solar system, also known as standalone battery. And these expenditures include installation costs, equipment costs, and soft costs like permitting fees and interconnection fees. So if the final number on your contract is $25,000, the tax credit would be worth 30% of that, which is $7,500. Now here's the part that tends to catch people by surprise, including myself when I first learned this. So the solar tax credit is not a check that automatically comes in the mail when your solar system is activated. So then how does it work? Well, the solar tax credit is claimed on your federal tax return and it reduces your tax liability, which can help increase your refund or decrease the amount of federal tax that you owe. All right, I can feel this getting sticky, so let's run an example to break it down. Now let's say I purchased a $25,000 solar system that was installed and passed inspection in the year 2022. When I file my federal income taxes for 2022, I'm going to use Form 5695 to calculate and claim my residential clean energy credit. First, I throw the total cost of the project in line 1. I carry that number down to line 6A and multiply by 0.3 to get the total credit amount and put that in line 6B. Now the total amount that I can claim in 1 year is limited by my tax liability, which I would calculate using the Form 5695 worksheet and inserting that number into line 14. So in this example, let's say that I have $10,000 in tax liability and the credit is worth $7,500. That means that I can claim the entire credit in one tax year. Now there are scenarios where the solar tax credit value is going to be higher than your tax liability, and we'll talk about how to deal with this later in the video. But for now, we're going to take the value in line 15 of your 5695 and transfer that over to a Schedule 3 1040, and that's where all of the non-refundable tax credits meet up, and like the Mighty Morphin Power Rangers, they combine and you transfer that value over to line 20 of a 1040. And here's where the solar tax credit goes to work. Line 18 of Form 1040 shows how much tax you owe before credits and payments. Line 21 shows the total value of your tax credits, including the residential clean energy credit. In line 22, you subtract your tax credits from your tax liability to get a newer, lower total. So instead of owing $10,000 in tax for 2022, I now owe $2,500 in tax thanks to my solar system. Now let's say I'm a W-2 employee and by some miracle I had exactly $10,000 withheld from my paycheck for federal taxes throughout the year. So that means I've already paid $10,000 in taxes, but thanks to my solar tax credit, the amount I owe is only $2,500. So that means I've overpaid my federal taxes by $7,500 in 2022, and Uncle Sam owes me a refund for that amount. Now I know that feels like a lot of hoops to jump through, but if you work with a licensed tax professional, claiming the credit is as simple as providing them with an accurate figure for what you paid for your system, which is listed right on your solar contract. So now that we know how the solar tax credit works, let's look at some other common questions about it. Now, one of the most common questions about the solar tax credit is if it's a refundable credit. And the answer is no. The solar tax credit is a non-refundable tax credit. And here's the difference. So let's say that your solar tax credit is worth $7,500, but your tax liability comes in at $5,000. With a refundable tax credit, you would get a refund for that $2,500 surplus. With a non-refundable tax credit, you can't get a refund for that amount, but you can carry it over into future tax years. And that brings us to another very common question about the solar tax credit, which is how many times can you carry it over to future tax years? As I mentioned earlier, there are scenarios in which a household's tax liability is lower than the value of the solar tax credit. This is actually quite common among retired homeowners with no income and therefore very little tax liability. So again, let's say the credit amount is $7,500, but the tax liability is only $5,000. Now, in the first year, you would claim that $5,000 credit, and then you would carry over the $2,500 credit into a future year. Now, this surplus can be carried or rolled over for as long as the residential clean energy credit is in effect, and currently that's scheduled through 2034. And that brings us to another common question. If this tax credit is available until 2034, how many times can one person claim it? And the simple answer is you can claim this credit once per system. So if you install a system on your home and claim the tax credit for it, and then you decide to move and you install a system on your new home, you can claim the tax credit again on that new home. You can also claim the credit on multiple homes that you own at one time. Now, according to the IRS, you can claim the residential clean energy credit for improvements to your main home, whether you own or rent it. You may be able to claim a credit for certain improvements made to a second home located in the US that you live in part-time and don't rent to others. Now allow me to translate that. If you want to claim the solar tax credit for multiple homes, consult a licensed tax professional before you get too far in the process. Now, another common question is if the federal solar tax credit can be combined with state and local incentives to further reduce the cost of the system. And the answer to that is yes. However, it's important to note that if a rebate reduces the upfront cost of the solar system, that also reduces the value that the tax credit is based off of. So New York is actually a perfect example of this because it offers upfront rebates and its own state tax credit in addition to the federal solar tax credit. So let's say you buy a $25,000 system in upstate New York and the NY Certa rebate is worth $1,500, and that reduces the price that you pay down to $23,500. Now, at 30%, your federal tax credit is going to be worth $7,050. The state tax credit will be worth $5,000 since that's the maximum amount. You claim the federal credit on your federal income tax return and the state credit on your state income tax return. And combined, the three incentives would reduce the cost of the system by $13,550. Now, our last common question is if the solar tax credit also applies to the cost of new roofing materials that are installed as a result of the solar project. And the answer to that is no. Now, according to IRS, the solar tax credit does not apply to traditional roofing materials because they primarily serve as roofing or structural function. However, it can apply to roofing materials that serve as solar electric collectors themselves. So if you install solar shingles or a Tesla solar roof, then you can claim the solar tax credit for that roofing work. Now, there's been some confusion around this topic, but the IRS is very clear that the solar tax credit does not apply to traditional roofing materials like asphalt shingles or clay tiles. And I would be wary of any installer that tries to tell you otherwise. All right, what did we learn today? Number one, the solar tax credit is a big, complicated beast. And if you have any questions about it, you should consult a licensed tax professional before you sign a solar contract. Number two, yes, it's complicated, but it's also the most valuable solar incentive in most markets. So it's totally worth putting in that legwork up front to reduce the cost and by extension, increase the savings of your solar system. And number three, if you have very low tax liability, there's a chance that you won't be able to claim the entire credit even after rolling it over multiple years. And while that's a bummer, let's not step over a 20 to pick up a 1. The solar tax credit is a great incentive, but it's also just the cherry on top of the savings that you can get by going solar. So even if you can't claim the whole thing, it's worth looking at quotes and considering solar anyway. That's all for this video, and if you have any further questions, leave them in the comments sections below or visit the solar.com Learning Center where we have tons of articles on the solar tax credit. A link for that is in the description below. I'm Sam from solar.com. Like this video and subscribe to our channel to see more videos like this, and we'll see you in the next one.